Hi, I'm Renjini, Department of BCom PA. Now I am going to discuss about cost and management accounting under the topic comparative statement. So one by one now we are going to discuss. So first, what do you mean by comparative statement? The comparative statement is a financial statement that show financial data for two or more periods. By slide we will discuss. What are the how to identify it is the growth, decline and performance trends, and comparative or financial statement in which figures two or more accounting period and presented side by side facilitate comparison. The main purpose is to evaluate the direction and deep and speed of financial challenges, and how to identify and how to compare. First we are going to compare measuring change, and second thing understanding growth, and the third thing identifying structural shift, evaluating management performance, and how to analyze the analytical foundation. Comparative statement are based on two major analytical dimension. That mean first one is a current year and second things previous year. And how to calculate it, show absolute change, maybe it was increase or a decrease, and it calculated percentage change. The formula is absolute change equal to current year minus previous year. Percentage how to calculate, that mean change minus change divided by previous year into 100. So these are the calculations of comparative and financial ratio analysis. And the next thing, comparative income statement. And how to calculate income statement. First one, sales growth and cost control and profit improvement. And the first, it is full and full focus on revenue growth, expenses control, profitability trend and operating efficiency. And key analytical points is sales trend, continuous increases, maybe it was a positive growth, and cost of goods sold and gross profit trend and operating expenses and net profit. And it will become under, for example of interpretation, sales increased by 2% and net profit increased by 5%. So how to calculate? In here the indicates is rising expenses and reduce operational efficiency and possibly higher interest or tax burden. And the next thing is comparative balance sheet is deep understanding to sheet evaluates financial position and structural strength, and it's help to analyze liquidity position and solvency conditions and capital structure and asset growth pattern. And here we are going to conclude some advantage and disadvantages of common comparative statement. And what are the advantage under, I'm going to discuss about three categories. The first one is easy to understand performance trends, and the second thing is helps management to planning, and the third thing is useful for investors and creators, and the limitations is based on historical data and fluctuation not considered and affected by accounting policy changes. And then last one is structure and strategic insights. The comparative statement reveals strategic decisions such as expansion policy and aggressive sales strategy and debit financing policy and dividend policy. And the laws different stakeholder is performance evaluation and budget control and strategic planning, and the investors is growth trend analysis and dividend sustainability and risk evaluation. And what are the creditors, liquidity position and debit repayment capacity. And limitations also inflection distractions and accounting policy changes and window dressing and external factor ignored. And finally I am going to conclude, comparative statement are not just a tabular comparisons, They are diagnosed tools that measuring financial movement and detective operational inefficiencies and reveal financial strategy and support strategic decision making. So these are the conclusions of comparative statement. Thank you.